number last of your financial management is receivable management, which carries weightage of 5 to 10 marks. Whenever you guys are talking about receivable, if you remember your accounts balance sheet, I'm talking about your AS and other stuff. In that, you give separate heading, and that heading is trade receivable and trade payable. Trade receivable means after performing trading activity. Here trading activity is not stock trading. Here trading activity is goods trading activity. That means after selling the goods to your customer, generally in market, two types of customer you are going to get. First one is cash customer and second one is cash customer is going to give you immediate cash. So nothing is receivable from them. Whenever you are talking about receivable, receivable is purely related with credit customers of the company. Now tell me, think from company's perception, if company wants to maximize the profit. For maximization of profit, they need to increase and improve their revenues. For increasing and improving their revenues, they have to sell more and more goods in the market. Indian market is monopolistic market or competitive market. So lots of competition is there. It is not easy to attract customer. So there are multiple techniques which you can use for attracting the customer. You can offer them tea, you can offer them coffee, you can offer them beverages, you can offer them snacks, you can greet them, you can treat them well, you can give them good after sales service, right? No? If you want to increase your market share, increasing market share means increasing the revenue as compared to the competitive. If competitor is selling more and more product, and if you are targeting to sell more than your competitor's product, in that case you need to attract more customer. There are multiple techniques which can be used for attracting the customer, and the best technique and the maximum time use technique is called as offering discounts. If you offer a discount to customer, no doubt you are going to attract customer, but that will result in losses also. No? We should take care of one important thing. We are dealing with maximization of profit. If you are offering irrelevant discounts, random discounts, that will result in reduction of your profit. If I am selling one product at 100 rupees, if I offer 20% discount, immediately my revenue will get reduced by 20%, that is 20 rupees. In that case, sometime it becomes very difficult to recover fixed cost. For the recovery of fixed cost, you need sufficient revenues, and if revenues are not sufficient, in that case you will be facing losses. To avoid this particular thing, still if you want to attract more customers, still if you are seeking to improve your sales, in that case one more thing you can use, and that thing is very, very important from Indian market's perception, and that is maximization of credit period. See, if I am selling product in the market, my competitor is also selling product. I am asking my customer to pay immediately, then only I will give you product. But my competitor says take 1 month's credit. Tell me, customer will opt for which option? Cash sales or credit sale? Because he is offering 1 month. My client, my customer is getting time lag of 1 month. He can arrange funds during that month from the market, and then he is going to make payment. So what is more feasible for customer? To go for cash purchases or to go for credit purchases? Now, if I want to become successful in the market, then I have one more option. My competitor is offering credit period of 1 month. If I offer credit period of 1.5 months, customer will come to me. It is very, very logical thing. See, no, if JK Shah classes is saying attend all the sessions and then give fees, number of admission can be improved. But there is one more risk involved here, and that is called as risk of bad debts. Many students are there, many students, generally I have experienced this thing because I am in coaching class industry since long. If you give this kind of offer to students, student will come sincerely, they will attend the lecture, but on the date of payment, they will become untraceable. Untraceable means their phone is off, their DP is gone, everything is vanished. In that case, it becomes very difficult to recover the money from the customer. That means if you want to attract more customer, that last bench girl, if you are done with your that game, chatting, whatever you are doing with your cell phone, switch it off and listen to me. And if you are not interested, you can go out. You are doing CA forcefully. I am personally asking you to come every day for the lecture. If you have interest, if your concepts are getting clear, then please be seated. Otherwise, you are free to leave the class at any point of time. Now, What was the discussion going on? We were discussing about the maximization of credit period. If you maximize the credit period, maximization of credit period is called as you are liberalizing the credit policy. If you are using liberal approach, that means you are giving more and more credit periods to your customer, and if you are giving more credit period to your customer, no doubt customer will get attracted, you will be able to increase your sales revenue, you will be able to increase your profit, but at the same time one risk comes, and that one is called as risk of bad debts. This entire chapter deals with management of receivable, and management of receivable is nothing but evaluation of CP, and here CP stands for credit policy. Company is going to develop multiple policy. Company is going to check net benefits or net profits in case of all the events. Company will check what will be the profit for the company when 15 days credit period is given. Company will prepare one more policy and they will check what will be the profits available with the company when credit period they increases to 30 days. What will happen when credit period they increases to 45 days, 60 days, 75 days and so on. They are going to calculate all the policies and they are going to evaluate them. After evaluating, which policy is to be considered? The policy which gives lesser profit or highest profit. Now question comes, sir, how this evaluation takes place? For the purpose of evaluating the policy, we are going to use the income statement. Again, we are at the same point. This is the point of starting of financial management, and the same point is there at the end of financial management. Income statement always starts with sale, but guys, you should consider only and only credit sales as far as this chapter is concerned. Why? Receivables are which customers? Credit customers. So we should evaluate policy by considering full sales or only credit sale. From credit sale, first we are going to deduct VC. What is VC stands for? After deducting VC, you are going to get contribution, then we will deduct FC, then you are going to get no. Here is the change. Instead of recording EBIT, now we are going to record GP, and here GP stands for, we are not preparing income statement for entire company. We are preparing income statement for credit sales. Only credit proportion we are considering this. That means cash proportion is already been ignored. If gross profit is computed from gross profit, guys, please remember four things. First, you should deduct AC. Then you should deduct CC. Then you should deduct BD. And then you are going to deduct discount. What is first? I don't know what is the full form. First you should remember this entire stuff. First is AC, second one is CC, then BC, no, BD, and last one is discount. First one is AC. AC stands for administrative cost. Many a time company always maintain one separate department for collection, and that department is called as collection department. This department only looks after collection from customer. That means they administrate their customers, and for that purpose whatever cost they incur is called as administrative cost. It is not general office and administrative cost. It is administrative cost incurred for administrative in your customers. Collection department's cost. CC stands for collection charges. This is my department. Look at my department. Look at the faces of my all personals. These all are the key members of my company. These all are the department's representative. This is my department. Look at that fellow. He is drinking water. He is not at all bothered about recovering money from the customer. This is my efficient department, and this efficient department is not able to recover full amount. I ask them, I force them, please recover full amount. Otherwise, I am going to remove you from this designation, from this department. They are also least bothered. They are saying, do whatever you want. We are working for 8 hours. In 8 hours, 4 hours we are on Instagram, WhatsApp and other social media. 4 hours effectively we are working, but sorry sir, we need 1 hour break also for lunch. So time available with us is 3 hours, government employees typical. 3 hours I will be performing, we are going to perform collection work only in 3 hours, and whatever collection is possible, we are going to put 100%, but only for 3 hours. I said okay. Now for collection purpose, I am appointing special team. These are my recovery agents. These both are my recovery agents. They are going to meet my customer. They are going to reach my customer with gun and all. Give my money. Give my sir's money. This is how they are going to recover the money. Now if they are using whatever whatever things they want to use and they are giving me collection, then they are not going to perform this job free of cost. I have to pay them additional charges, and these charges are called as collection charges. No. Which chapter I introduced? Ultimate objective of receivable management is to evaluate the credit policy. The policy which gives you highest benefit is to be considered. Guys, very simple and common rule, which is very practical. If someone is giving you highest benefit, if policy is giving you highest benefit, you are going for other things or highest benefit things. So in your question, they are going to give you multiple policies. It is our duty to evaluate those policies, and for the purpose of evaluation, we are going to prepare income statement. Income statement, we should start with total sales or cash sale. Why credit sales? Receivable or credit customer, we are evaluating policy to be offered to them, right? No, our objective is minimization of profit or maximization. For that purpose, we are maximizing our revenue, and revenues can be maximized by giving more and more credit period. It means we are going to offer random credit period. Customer is so cute, take 45 days credit period. You are so dashing and handsome, take 60 days credit period. See, I am doing business here. Okay, I am doing trading business here, and if I am dealing with trading, I have to give very computed, or you can say the credit period which is beneficial for me. That credit period I am going to offer to my customer, and for that purpose we are going to prepare income statement. Income statement, we started with CR sale. CR is what? From that we deducted video call. Then we calculated contribution. Then we deducted foundation course. What is that? After that we calculated government promises. What is that? Gross profit. Now generally you get EBIT. In this chapter we are going to consider gross profit, and from gross profit 4 items we are going to deduct: AC, CC, BD, discount. What is AC? Administration cost. CC, collection charges. BD is bad debt. This is the risk which is involved in extending the credit periods. And one more thing, you can offer to your customer discount. Ultimate objective of this chapter is attracting more and more customers. That's why these all are the benefits which we are offering them. These are the benefits for them, but same benefits are considered as cost for the company. After deducting this, you are going to get NPBT. Guess the full form. Minus tax, you are going to get EAT. Any doubt till this particular point? Sales minus VC, contribution minus FC is equal to gross profit minus AC, CC, bad debt, discount is going to give you EBIT. Sir, how you know this is profit before tax? Because tax is not yet considered, no? So this is profit before tax. After deducting tax, you are going to get net profit after tax, and from that we are going to deduct CID. This is something new. New episode of CID is coming. This is cost of investment in debtors. Generally, it is called as opportunity cost. cost of investment in debtors. You have blocked your money with debtors. You have invested your money with debtor because you was planning to increase your sales, and that is why you have given them credit. Instead of blocking fund with debtor, if you invest it elsewhere, you are going to earn some return, and that cost is called as opportunity cost. Sir, how to calculate this opportunity cost? I am going to spend 20 minutes approximately on that explanation, but once this is done, this is to be calculated separately by preparing working note, and this is going to give you net benefit. When multiple policies are there, you will be having multiple benefits. You should select the policies with maximum benefit. Entire chapter deals with two concepts. First, evaluation of policy, and second, factoring agreement. Factoring agreement I am not introducing now. Only in today's lecture we are going to deal with selection of policies, and for the purpose of selecting the policies we will be using this kind of income statement. Concepts are clear? This, take down the basic introduction first. Write down the heading: receivable management. 5 to 10 marks. Receivable management, 5 to 10 marks. On next line, start writing. The main objective of this chapter is to maximize the overall profits of the company. The main objective of this chapter is to maximize the overall profits of the company by offering them various discounts, comma, extended credit periods, etc. For this purpose, multiple credit policies are to be evaluated. And the policy with highest net benefits is to be selected. Change the paragraph. Evaluation of credit policy can be done. By using the following statement. On next line, please copy this format. Statement showing evaluation of credit policies. See, generally, no, these people used to give you cash balance and all. How they determine cash balance? That we discussed in yesterday's lecture, that William J. Powell model. Same way, they used to give you credit period. On what basis credit periods are offered? That is to be evaluated in this chapter. So every chapter has different purpose, different objective, and those objectives we are fulfilling here. First one is particulars. You can start copying this. We have already discussed this statement. Suppose first one is policy number 1. Second is credit policy number 2. Sir, what is the difference between them? Say for example, first policy's credit period is 30 days. Second policy's credit period is 45 days. Policy number 3, 60 days is the credit period. That means company is planning to offer either 30, 45 or 60 days credit period to the customers. So random selection is not possible. We need to calculate net benefit under all three options, and for that purpose, first we will record credit sales. What is to be deducted from this? Variable cost first, because it is directly related to sales. So variable cost associated with credit sales to be considered over here. After deducting this, as always, we are going to get contribution. From contribution, you will deduct fixed cost, and this will give you gross profit. Decision is to be taken on the basis of gross profit. No other expenses which are associated with policies are to be deducted. There is a list of expense. First is admin cost. CC is collection cost. You can also say collection charges. These are the charges given to outsiders for performing special collection duties. Third one is bad debts, and whenever bad debt is given in percentage, you should calculate it as percentage of sales. Certain percentage of sales you are not going to recover, and that percentage is called as bad debts. And finally, if any discount is there. Now again, totally depend on the question. With whatever element out of this 4 is given in the question, that element we need to record. Remaining elements you can skip. There is no compulsion to record everything. When you deduct all these expenses from your gross profit, you are going to get net profit, but that will be considered as net profit before tax. NPBT. Valid shortcut you can use in exam. NPBT is also called as PBT, EBT. Any term you can use in exam. Once net profit before tax is computed, we are going to take tax related data. If tax is given, you should consider that, otherwise you can skip. In that event, your EBT and EAT both are to be considered as same. This gives you NPAT, net profit after tax, and after NPAT you should record cost of investment in debtors. Always we are going to compute this by preparing separate working note. A question comes in mind generally, why this cost of investment in debtor is recorded after tax profit? Why it is not recorded prior? This is real expense, actual expense, or this is imaginary expense? Imaginary expenses, by showing imaginary expenses to the tax department, if you are trying to minimize the tax liability, then they will ban your operations for lifetime. Income tax rules 1961 and Income Tax Act 1962 says opportunity cost, notional expenses, imaginary expenses you are not allowed to show for reducing your tax liability. So as far as taxation and accounts is concerned, opportunity cost, on opportunity cost you are not going to get any benefit, and that is why that is recorded after payment of tax, as department is not going to agree to give reduction in tax liability due to opportunity cost. This is advantage for con. Sacrifices are considered in FM only. Once this is adjusted, you are going to get your final answer. Net profit, net benefit. Any term you can use. For uniformity, we are going to use here net benefit. We are going to compare all the benefits, and out of all three policies, whatever is highest benefit is to be selected. Not necessarily they will be giving you 3 policies only. They will ask you 4 or 5 evaluations also. Copied. Look at this explanation now. In overall chapter, this is the only important point you can say. CID, what is CID stands for? Cost of. For calculating cost of investment in debtors, you need to calculate first value of debtors. That means whatever amount you have blocked with debtors, that is called as value of debtor, and that value of debtor you should multiply with ROI. ROI stands for return on investment, and return on investment is your opportunity cost. Try and understand first. Let me continue with one example here. Suppose credit sales of my company is amounted to rupees 12 lakhs. 12 lakhs is the amount of credit sales. Okay. This is amount which is blocked with my customer for entire year. No. Out of this amount, certain amount or part of the amount I'll be recovering from my customer on gradual basis. Correct? No. If credit period associated with my customer is 3 months, credit period is how much? 3 months. That means after every 3 months, I will be recovering some amount. Sir, how you are going to calculate 12 lakhs into 3 by 12? Hope you remember we used to value debtors in working capital estimation by using one formula. LOA into credit period upon 12. Same thing we are doing here. LOA is credit sales is 12 lakhs into 3 divided by 12. You are going to get value of debtor as 3 lakhs, means after every 3 months 3 lakhs rupees you are going to collect from the debtors. That means you can say 3 lakhs rupees is block for 3 months. Instead of locking this 3 lakhs rupees with debtors, if you invest this money in the market for 3 months, you can earn ROI on that. No. Suppose ROI given in the question is 10%, that means rupees 30,000 earned by the company or 30,000 sacrificed by company. 30,000 could have earned, no, but they are not earning. That means this is called as opportunity cost, and this is to be recorded here as a CID. Understood. Value of debtor is not new for you because working capital chapter is over. Whenever you are calculating value of debtor, formula to be used is credit sales into credit period divided by 12 or 365 or 52. That will give you value of debtor, and once value of debtor is available, you are going to multiply that by ROI. But this calculation is correct when you are solving some under total basis. If you are solving some under cash cost basis, instead of credit sales, you should consider total cost, and total cost means variable cost plus fixed cost. So alternatively, debtors can also be valued on the basis of cost. No. In some questions, institute is not going to give you fixed cost. In that case, debtors you need to value on variable cost. Sir, why you are confusing us, sir? Give us only one point, sir. You should remember order. Always you should give priority to total cost first. When fixed cost is not given, variable cost. And when variable cost is not given, we don't have other options available, credit sales. This is the priority list. What is the full form of CID? For calculation of CID, first what we should calculate value of debtor, and this value of debtor will multiply by this ROI will always be given in the question. 100% is not ROI, 100% is my guarantee, assurance. This will be given in the question. What we need to ascertain? Value of debtor. For calculating value of debtor, formula number 1, total cost into credit period divided by 12. Okay. But for calculation of total cost, two costs are needed, variable cost and fixed cost. If fixed cost is not given in the question, variable cost into CP upon 12. Sir, if variable cost is also not given, then credit sales into credit period upon 12. This is going to give you value of debtor, and that is to be further multiplied by ROI to calculate the CID. CID is a real cost, actual expense or opportunity cost. Understood perfectly? Give heading below that statement. Cost of investment in debtors.